me help you? Let me help you. A step stool.
Be careful the headlines that you read and what you click on when it pertains to mortgage rates. Because I did this yesterday just to see what was out there. I do this normally every day, and then usually I shoot Kevin a text to see if it's true or not. And almost all the time it's not true. But there's quotes out there for rates that I saw at like 5, 6, 5. They just want you to click and call them. But it involves points, which is a legitimate expense for people when they are considering a mortgage. So do you want to talk a little bit about points?
Yeah, so points it's a mechanism for a consumer to basically purchase a lower rate. We talk about points all the time because we have to, because every website people are looking at have points built in. They don't know it.
Right.
So we have to be aware of this. Every consumer is on their phone when they're trying to get an idea where the market's at, whether they just Google where are mortgage rates or they go to like bankrate.com or any of those websites. And everything you see, typically you're being pulled into a website, right? If I'm Googling mortgage rates, you might get 10 bank websites that would pull up. And you click on that one website, but you don't realize in the back of your mind that you're actually looking at a big marketing engine when you're looking at any company website. So they will always promote the best of the best that they possibly can without flat out lying. So you might see something like 5.5% for a 30-year fixed, but there's a paragraph of small print below that or at the very bottom of the website, and it'll have all the assumptions built in. This is based on a 780 credit score, single family home, a loan amount of $350,000 or more, maybe in a certain state, might be the state of Texas.
I saw a state there yesterday for sure.
There are geographical differences when it comes to interest rates. And a lot of times it'll say this assumes 1 point or 1.125 points. And that is something you don't have to pay. But they add that in there because it looks better to promote it that way.
Yeah, it makes the rate look better.
Fannie Mae or Freddie Mac, it shows their national average. That's still, you can't go off of that because that may not be you, right? Yep. So if you have not so good credit or you're only doing 5% down, you're not going to fall into that national average. So you can't really look at that. Maybe if you're looking over the course of time, you can see that national averages come down. But those averages usually have points built into that too.
Mm-hmm.